Most traders think that to trade better, they need a better entry, a better indicator, a cleaner signal, a secret setup. But here is the problem. A beautiful entry can still lose money. A breakout can look perfect and still become a trap. An RSI signal can look clean and still fail. A support level can look obvious and still get destroyed. And when that happens, many traders start thinking, maybe my strategy is bad. Maybe this indicator does not work. Maybe I need to learn a new method. But sometimes, the problem is not the setup. The problem is that traders only look at the entry, but ignore everything around that entry.
No way.
For me, a good setup is not just an entry. A good setup needs 3 layers: context, location, risk. I call this the 3-layer trading system. And once you understand these 3 layers, every setup on the chart becomes much easier to read. The first layer is context. Context means the market environment. Before looking for an entry, I need to understand what kind of market I am trading in. Is the market trending up, trending down, or moving sideways? Are buyers in control? Are sellers stronger? Or is the market balanced? Does the higher time frame support this trade idea? Is momentum getting stronger or fading? This is the layer many traders skip. They see a buy signal and they want to buy. They see a breakout and they want to chase it. They see RSI low and they want to buy. They see a clean candle and they want to enter. But the same signal can mean very different things in different market conditions. A buy signal in a clear uptrend can be a good pullback setup. But the same buy signal in a strong downtrend may only be a weak bounce before price continues lower. Same signal, different context, completely different meaning. That is why I always want to read context first. Market structure can help you read context. RSI can help you read momentum. Dow theory can help you identify the trend. Elliott wave can help you understand where the market may be in a larger move. But no matter what tool you use, the question is the same. Does the current market environment support this trade idea? Context does not give me the exact entry, but it tells me one important thing. Should I even care about this setup? If the answer is no, I do not need to force the trade. Layer 2. Location. The second layer is location. Location means where the setup appears on the chart. A good setup at a bad location can still be a bad trade. This is a mistake many traders make. They may be right about the direction. They may see that the market is bullish. They may even know that buyers are strong. But then they buy in the middle of the move, far away from support, with no retest and no clear confluence. Then price pulls back normally and they get stopped out. Not because their view was wrong, but because their location was bad. A good location is usually a meaningful price area. For example, support, resistance, an old breakout zone, a retest area, a fair value gap, a Fibonacci zone, a liquidity area, or a zone where price reacted strongly before. Location answers this question. Am I entering at an area with an advantage, or am I just chasing price? This sentence is important. A good setup at the wrong location is still a bad trade. Because in trading, being right about direction is not enough. You also need to know where you are entering inside that direction. The third layer is risk. This is the layer everyone says is important, but many traders ignore when real money is involved. Before I ask, how much can this trade make, I want to ask, if I am wrong, where am I wrong? Where should the stop loss be? How much do I lose if the trade fails? Is the risk worth the opportunity? A setup without a clear invalidation point is not a complete setup. It is just an uncontrolled idea. Remember this, if you don't know where you are wrong, you are not trading, you are hoping. Risk is not just placing a random stop loss. Risk is how you define whether the trade idea is still valid or not. For example, if I buy because I expect price to hold a bullish structure, then if price breaks the important swing low, breaks support, and destroys that bullish structure, my buy idea is wrong. That is the invalidation point. When I have a clear invalidation point, I do not need to argue with the market. If price reaches the level where my idea is wrong, I exit. No praying, no moving the stop loss, no telling myself, maybe it will come back. A trader does not survive because they never lose. A trader survives because they know how to lose in a way that keeps the system alive. How the three layers work together. Here is the sentence I want you to remember. Context tells me if I should care. Location tells me where to care. Risk tells me if the trade is worth taking. Context tells me whether the setup deserves attention. Location tells me where that attention should be. Risk tells me whether the trade is worth entering. When all three layers align, the setup becomes much cleaner. It does not mean the trade will always win, but at least it is no longer an emotional entry. It becomes a structured decision. Simple example. Let's say price breaks above a resistance level. Many traders see the breakout and want to buy immediately. But if I use the three-layer trading system, I do not rush. First, I check context. Is the market actually bullish? Is price making higher highs and higher lows? Does the higher time frame support the idea? Is momentum strong? If the context is weak, I skip it. If the context is good, I move to location. Where is price right now? If price has just broken out and already moved too far, I do not want to chase. I want to see if price can pull back to the old breakout area. That old resistance may become a retest zone. If price pulls back into that zone and reacts well, the location starts to make more sense. Then I check risk. If I buy at this retest area, where am I wrong? Maybe the invalidation is below the nearest swing low, or below the old breakout zone. If price breaks back below that area, the breakout idea has failed. Now the setup is much cleaner. The context supports it. The location makes sense. The risk is clear. That is how I want to read a setup. Not by entering just because I see a signal, but by checking all three layers before making a decision. When I skip the setup. A good system should not only tell you when to enter, it should also tell you when to stay away. With this three-layer system, I skip the setup if one layer is missing. If there is an entry signal but no context, I skip it. If the context is good but the location is bad, I skip it. If the context and location are good but the risk is unclear, I still skip it. If I do not know where I am wrong, where to place the stop loss, or whether the risk is worth it, the trade is not good enough. Many beginners think good traders are better because they find more trades. But in reality, good traders often skip more bad trades. Remember this, the best traders are not better because they trade more. They are better because they skip more bad trades. That is how I use the three-layer trading system to avoid entering a trade just because the signal looks good. No system works 100% of the time. This video is for education only. It is not financial advice. If this helped, take 2 seconds to like the video. Thanks for watching. I'll see you in the next one.